Welcome to another Stage Analysis video. It's Sunday the 16th of April 2023. I'm going to start off today's video with a look at the major indexes before we get into the more of the regular content. So starting with the S&P 500 here on a longer term view on the weekly chart. Obviously the best way to do stage analysis is on a weekly chart before we then use a multiple time frame approach by dropping down to the lower time frames, the daily and intraday time frames, such as the 195 minute, which gives you 2 bars a day, or some of the lower time frames like the 2 hour, 1 hour, etc. But obviously on the weekly, as you can see at the moment, attempting to test that stage 2 level for the last 3 weeks now in the S&P 500, but you can see there's a bit of a disparity compared to what's going on in the what we call the combined percentage of stocks above their 50-day, 150-day and 200-day moving averages. So they're short, medium and long-term moving averages. So although it's moved back above its 5-week moving average recently, and we're in a what we call a neutral environment between the two moving averages here, we're still only at 42% currently, still 3% below the declining 10-week moving average here. So we're still in this neutral zone. You can see it's obviously dropped from 71 all the way down to 28 since the February high. Then we've only recovered 13 to 14% since that low. So we've only recovered around a third of the drop from the February high. So although we're sitting at a similar position to where we were at the high on the 2nd of February there, there's 2/3 less stocks than there were at that point above their short, medium and long-term moving averages. So much weaker market overall as we hit this high level at the moment. So a bit of a disparity there, obviously led by the strength that we've seen in the large caps recently, with the likes of Apple, Google, Microsoft, etc., all starting to test and move into early parts of stage 2 advances. Obviously with their weightings in the likes of the S&P 500, they have a big impact on that. So we drop down to the daily time frame here. You can see we're still in this resistance zone. We've got that initial failed attempt to move out into stage 2 that turned into an up thrust and a lower high test, and then rolled back into the range. Got that retest under the 200-day moving average, and then started to move up some short-term higher highs. You can see we've moved back above this rising 180R level now. So we're in a short-term uptrend, but in a resistance zone at the moment, but above our short 21-day moving average there, 50-day and 200-day moving averages, and they're all in the right stacking order at the moment. So we are in a strong position in order to potentially move out into stage 2, but at the moment very much creeping into early stage 2 and not yet clear of this significant resistance zone, which if we go back to the weekly chart here, you can see has been a major source of resistance now, 5-6 times now that we're in. So potentially, until we can burst through this more convincingly, we're likely to still be in a range here. So whether it's stage 2 or not, technically or not, doesn't really matter. It's that we haven't yet cleared that significant resistance zone that was formed over the most part of the last year. And as you can see from the percentage of stocks down the bottom here, we've got, as you can see, all through 2022 here until now, there was only a brief point where it's been above the midpoint a couple of times here. So a knock above in August, in late November there, and then the spurt at the start of the year in January into early February there before it started to roll back over once again. So we only had 3 really brief periods where the market was starting to get a bit stronger and a bit more bullish, but the vast majority of that time we've been mostly in the stage 4 zone, with a few moves into the stage 1 zone there. So we move on to the Nasdaq 100 here. Again, this is our leading index at the moment, moving out into stage 2 3 weeks ago. But once again, as you can see on the weekly chart here, moving into an area where it's formed support and resistance multiple times now throughout the course of the last year. Still not really clear of this zone at the moment, still right in the midst of it. So until it starts to get above that, then obviously it wouldn't be hugely bullish yet. It's still in a very vulnerable position. It could easily roll back over and turn into an up thrust here. So relative outperformance versus the S&P 500, as we can see here, it's started to move back above what we call the Mansfield RS0 line here, which is the 52-week moving average of the index of the whatever your ticker you're using divided by the S&P 500. Once you start getting above that 52-week moving average, then you're in the outperformance zone. You're above the zero line as such. Look at this on a daily time frame. You can see, just as I said, starting to move out into early stage 2 here, but not yet convincing. Still got a similar look to what we saw when the S&P 500 popped out, then it's made a lower high so far. So until we start to see higher highs and some follow through, obviously this is vulnerable to a potential up thrust and could pull back into the range again. So still watching this one carefully. Like we said, outperforming versus the S&P 500. Nasdaq Composite, on the other hand, still hasn't broken out, still in stage 1 range here, so consolidating at the top of the range again, underneath significant zone of resistance here still, but is outperforming the S&P 500 in the near term since early March there. If you look at this on the daily, you can see obviously clear level of near-term resistance here for it to get through. Starts popping above that 1300 level, then potentially could start to move into early stage 2, but at the moment still consolidating within this broader stage 1 structure. Russell 2000, on the other hand, looking much weaker still can't manage to get above this 30-week moving average. We've had 3 weeks to attempts at it. We again squatted this week as a test of it. The 10-week moving average is still declining above that, still underperforming versus the S&P 500 since the early part of March when we had formed this significant bar here. So hasn't managed to get anywhere near into this significant bar as yet, still consolidating right in the lower range of that bar. So weak price action at the moment. Potential, obviously, if it did roll to the downside here for a stage 4 continuation breakdown at that point. But if it can start to recover this 180 levels, talked about on last week's video, if I drop into the daily here, start to move above this area through here, potentially it'd start to be a little bit more bullish in the near term. Still would be within the range, but if we drop down onto an intraday time frame, you can see the intraday stage 1 base structure at the moment. So we start moving through that 180 area there, then we'd have an intraday stage 2 breakout. So very first step in terms of turning it around if that was the case, but would still be underneath that 50-day moving average, a major zone of resistance. So still have a lot of work to do. As you can see, you can do stage analysis on multiple time frames there, from the weekly down to the daily and then an intraday chart. So obviously your individual moves can start on that intraday stage 2 breakout attempt and start to move you back through. When I look at this data from a different perspective, I wanted to have a look at some of the growth ETFs at the moment. So there's multiple different growth ETFs. You've got the Russell 2000 growth ETF. We've got the Russell mid cap growth ETF. We've got the S&P 500 growth ETF. You've got the IBD 50. So you can see from all of these, obviously the different types of performance and where they are at the moment. You've got this obviously failed early move into stage 2 in the Russell 2000 growth, which then rolled over similar to the Russell 2000. But you can see it actually has moved back above its 30-week moving average here over the last 3 weeks, which the Russell 2000 itself hasn't been able to do. Whereas if you look at the mid caps, you can see slightly stronger, much more above its 30-week moving average, and actually 3 weeks above its 10-week moving average here. So actually holding potentially the stage 2 level here, recovering that level, but still within this significant bar resistance range here. Whereas the S&P 500 growth ETF here, obviously making a stage 2 attempt at the moment, starting to move out into early stage 2. Not much in the way of volume, still underperforming versus the S&P 500 itself, but been outperforming since the start of the year. So short-term recovery, but not yet above its zero line, and outperforming on a yearly basis there. But whereas the IBD 50 still has been massively underperforming versus the S&P 500. But although this looks terrible in here compared to the others, if we zoom in on the performance chart here, you can see S&P 500 in red here, Russell 2000 in blue, green for the Russell 2000 growth, pink for the Russell 2000 mid caps. Then the S&P 500 growth is the light blue, and the black is the IBD 50 here. So you can see the IBD 50 black line here is actually up 7.29% year to date. Whereas the leader here, we've got the S&P 500 growth at plus 10.6%. So if we look at these chart, you can see the S&P 500 growth is leading year to date here, versus whereas the IBD 50 is actually coming in third at the moment, just underneath the S&P 500. So doing better year to date, even though the weekly chart there looks quite terrible because it had such a deep stage 4 decline. So obviously the length and depth of this decline was more significant than we saw in some of the other growth ETFs here. So obviously the moves at the bottom of the range here are more significant percentage wise, but at the moment large cap growth is leading, followed by mid cap growth, and then we've got the IBD 50 and then the Russell 2000, whereas the Russell 2000 itself is obviously massively underperforming at only 1.61%. So large cap at the moment leading the way still in terms of obviously everything, and including the growth aspect here that we're looking at. Look at the VIX to finish off this segment. We've got it's breaking down on Friday there to its lowest level since early February there. So I think that was the February the 2nd day. Let me scroll, get the inspector on. 2nd of February, when it reversed last time, it did actually close right at the low, but it hasn't undercut it yet, so it could still rebound here. Potential double bottom, could get a sudden pullback in, which could pull the market back down again. But if this can follow through to the downside here, then obviously the market could continue to the upside. But at the moment, obviously it's in the strongest its position it's been in for a while, but not yet obviously making new lows.